Angan Guha, the CEO and MD at Birlasoft, is joining us to talk to us about their earnings. It was a bit of a mixed quarter this time because while the revenue growth picked up, the margins were on the weaker side. Angan, hi, good morning. Anisha this side. Why don't we start with a bit of a negative then? Margins have seen a sharp, contraction this quarter led by the investments. Will these investments continue into Q3 as well?
So, first of all, thank you for having me on the show. So, yeah, we are building an institution for the long term. So, we will continue the investments going forward. We are investing in our people as well as capabilities. In fact, in 3Q, we are also going to give a wage hike. So, from that perspective, the investments will definitely continue. But look, our endeavor will be to kind of recoup the margins back by delivering super growth going forward. I think we are back on the growth trajectory. Q3 is a soft quarter. So apart from Q3, I think Q4 we will be definitely delivering growth, and hopefully in a couple of quarters the margins will also be back.
Okay. Why are we getting very mixed signals from your peers? Some are saying it's okay, some are saying things are getting better, some are still confused. What is the reality? I mean, has the turn happened? Are we in for a gradual recovery? It may not be a V-shaped rally, but are we in for a gradual recovery for the sector per se?
So, Nikunj, look, I mean, I can only talk about the clients that we serve from my perspective. So, look, if you look at our business, BFSI continues to be very strong. Manufacturing is having a good growth this quarter. I personally feel healthcare, which has been a soft quarter for us for almost about 3 or 4 quarters now, will be back on growth in the future coming quarters. So my customers and the clients that I meet, they are cautiously optimistic. Obviously, right now things are a little bit slow because there is an election around the corner. But I don't see, post the elections, I don't see a great amount of demand generation happening immediately. It may probably lag a couple of quarters. So based on my understanding from the clients that we serve, it's a wait and watch. It's not getting worse, but it's not getting better either.
So as we unwind the year, what do you think would be the highlight for next 12 to 18 months? When you say things are not getting better, things are not getting worse, do you think this kind of a status quo could just extend itself for maybe 2-3 quarters?
I think so, Nikunj. I feel, after the election is over, maybe a couple of quarters, you will see a little bit of sluggishness from at least from the customers that we serve. But I strongly believe that in maybe about 3 or 4 quarters, the growth will be back. For us as a company, our job will be to execute. Look, last quarter, we actually did not do very well on revenues. This quarter, we bounced back very strongly with revenue growth. We hope to keep the revenue momentum going. Barring Q3, which is a seasonally weak quarter, I think we are back on the growth path.
Okay, back on the growth path. I just wanted to come back to margins a bit. You talked about how Q3, of course, is seasonally weak and there will be that wage hike impact. But could you help us, brace ourselves with what could be the impact? If you can help us quantify that a bit.
Yeah, so, my sense is the amount of wage hike that we are going to give, we will have 150 basis points impact on our margins. But look, our job is to execute better and recoup most of it. I think we will be able to recoup most of it. And we will see how the quarter looks like. It all depends upon how much amount of revenue growth we can deliver. And as you know, margins are also a manifestation of the revenue that we deliver. So 150 basis points, hit because of the margin, but our job will be to try and recoup as much as possible. But barring Q3, which will be a seasonally weak quarter, I'm expecting that the margins will start improving Q4 onwards. And if you then look at Q4, Q1 of next fiscal, Q2 and Q3 of next fiscal, every quarter, you will see us improving margins.
Back above the 14% mark by the end of next year or mid of next year?
So look, we don't give a guidance. Our endeavor, of course, will be to get back to the margins that we were in the last financial year, FY24. Now, whether it'll take me 4 quarters, 5 quarters, or 6 quarters to get there, I don't know. But our endeavor as a management team is to definitely get to that levels.
Right.
Let's talk about your deal win TCV. It was actually weak in the quarter gone by. It was down about 19.3% when you talk about it on a year-on-year basis, and that also on the 12-month trailing basis. So if you could tell us why is that so, and also how's the pipeline looking now?
So look, our pipeline is actually very strong. One of the reasons that our deal signings have not been very great, even for the first half year, if you look at our first half year, we've only signed about $300 million worth of deals, predominantly because some of the decisions that were supposed to happen in Q1 got pushed to Q2, is getting pushed to Q3 now. Now, we've not lost those deals. Those deals are still in the hopper. So hopefully we will close it in Q3. I can tell you our Q3 signings will be definitely better than Q2 signings. The trick would be to close as fast as we can. But if you really peel the onion, one silver lining in the entire thing is for the first time in probably about 8 quarters, 50% of our signings are net new. So that gives me a little bit more confidence that the revenue growth will continue in the future quarters. But you're right. I mean, we've had a disappointing signing in the first half year, and we hope to recover in the second half.
Okay, hope to recover in the second half, so signings are expected to be better. And Angan, just before I let you go, a quick word as far as the headcount and attrition figure is concerned, because this quarter for most of the companies, attrition has gone up. Would you be around this 11.8% mark? And what's the plan in terms of increasing the headcount? Because this quarter there was a bit of a dip.
Yeah, so the dip of the headcount was predominantly because we've rationalized a little bit of bench and a little bit of sales headcount as well. But from a billability perspective, I think we are just going up. Attrition, I feel, will continue to be in the same ballpark at least for the next 2 quarters, and then we will see how it goes. So overall, all in all, I feel our headcount uptick will come back in 4Q, and the attrition will be in the current range.
Attrition continues to be in the current range. Thanks, Angan, for making time and speaking with us today. So that's the clarity coming in from the management that, of course, this quarter was a bit weak when it...
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.